Hi everyone, it's Eric Cummings again from the Cummings Law Firm. I wanted to say hello. I wanted to introduce you to our second video related specifically to the CARES Act. If you haven't had a chance to check out our first video summary that's specifically related to Section 7A, it was in and out a summary that related to covered loans for business owners, right? And so the real question was, we went through what that looks like, what items specifically are covered, what timeline that covers. I'm going to put the link to that down in the description below. I'd encourage you to check it out. If you haven't watched it, if you need a refresher, whatever, it ties to this, because at the end of that video, we talked about what the upcoming video would be, what this video would be. This is about forgiveness, okay? This is specifically about the loan forgiveness. Essentially, business owners wanting to have the loan that they take out, that we take out, I take out, that loan treated as a grant. You want it to be forgiven. You want to not have to pay it back. You don't want any strings attached because it wasn't your fault. It wasn't my fault. It wasn't our fault that our businesses had to close down, that they were forced to close down as essential or non-essential businesses, right? And even the essential businesses are suffering because there's no one out there to do business with. So we want these forgiven. How do we do it? That's what this video is about. I'll go back for a second. You probably heard everyone talk about these loans. I'm using more of the formal language, but people are talking about them as the PPP loans, right? The Paycheck Protection Program is what it stands for. And the PPP loan, so if I'm going through and I mention PPP, that's what I'm referring to as the type of loan that now in this video we're going to talk about how to get that loan forgiven. First and foremost, I'll mention that we only get one bite at the apple. We only get one loan through this entire process that ends on June 30th. You only get one opportunity to take out this loan, so the recommendation is to take as much as what you need. And maybe even a little bit more than what you anticipate. I'll explain why that's important, not just for the reason that we're limited in how many applications we can apply. There's another reason later I'll talk about. But anyway, so getting into it, few rules that go along with forgiveness, right? What are the rules? As a business owner, when I apply for the loan, I want to know what the rules are. Now, on the back side, I want to know what rules apply to the forgiveness, okay? Specifically, we talked about in the last video, I summarized, and there's more lists that I'd encourage you need to talk to this law office or talk to the lender or talk to your accountant on what items a business owner is permitted to use the loan money for with the expectation that later it's going to get forgiven, because there's a list, okay? There's a list. So we got to find the list, and that's number one. So number one, when we're looking at forgiveness, we need to pull together all of our documents, all of our receipts, all of our everything. If you're naturally, if you're an entrepreneur, some entrepreneurs are very tedious, very precise, very analytical, very whatever. Others, a little bit like me, there's things I'm tedious in particular about, but I'm busy, go, ideas, moving and shaking. I get bored very easily, and I am one who probably is not great at keeping track of all the receipts and all the stuff and all the paperwork, so I hire someone to do that, right? Someone who is gifted at it, okay? This is an instance where it needs to be meticulous. This is an instance, just for a few months, where everything that we think is all the money is being used for a qualified item. We need to make sure that if you're in charge of it, you have to keep track of it so you can prove it later. It's almost like an insurance claim, right? You have to be able to prove the value that the money was spent, that it was spent for this thing, for this purpose, and that purpose, that thing is on the list, okay? You're going to have to back it up. So make sure you keep it, and if you can't do it, hire someone or ask someone to help you. Just get help to make sure it's taken care of, because it's going to be a big deal. The amount, when we apply for the forgiveness, now we're moving on to the forgiveness, right? Because the loan applications are going to conclude on June 30th. Once that's over, now we're going to start with the forgiveness. The amount of forgiveness, okay, it has to be equal to the itemized cost that was allowable, right? So if I take out a loan and my loan's $10,000, we'll say, pick a number out of the sky, then the amount that I'm asking for forgiveness on, say out of that $10,000, I spent $8,000 of it on my overhead costs. And I'm saying that all of those items that I spent, I used the $8,000 to purchase, that they're all on the list and everything matches and it's all good. And it has to be equal, right? So the amount of the forgiveness is going to be equal to the amount of money spent from the loan on the items that are approved. That's why it's important we know what items are approved whenever we, and not just proven that they're on the list, but also that we actually bought them, right? And we bought them during the time period that's applicable, okay? So we got to have all that proof and ready to go. Next, this is a big thing. This is a good thing. This is a very good thing, right? Typically, if I have a loan and I owe a bunch of money to a lender or to any creditor, a person, a friend, anybody, and I owe them money and there's a note and everything's all formal and I owe this money back. If there is a forgiveness of that, say it's a $100,000 loan, I pay $80,000, there's $20,000 remaining, and that is marked as forgiven. Guess what happens? I think we know this, right? That $20,000 that was supposed to go from my pockets and go into the pockets of the creditor, now I get to keep that money in my pockets. So the IRS, the taxing authorities, say that now I should be taxed on that $20,000 forgiveness. Thankfully, under this law, there's no taxable income associated with any amount that we are forgiven. That's a great thing. Fantastic. Okay? Next, the amount that's forgiven can't be more than the amount loaned. So how does that work? What do you if I take out a loan for $20,000, okay? Take out a loan for $20,000, and during the period I spend all that $20,000 on the items that I was permitted to. I was allowed, and they're all itemized, I backed it all up, everything's good. But then I used, we'll say, an additional $10,000 that I had sitting in an emergency fund, and I used that of my own money to kind of couple together with this loan money. I bring it all together, I pay it, and now when I go for forgiveness, I want credit for $30,000, right? I had the $20,000 loan, I spent $10,000 of my own, and it was all during the period, and even my $10,000 were for the things on the list with the backed up receipts and everything's good. And unfortunately, the rules say, no, you can't do that. So that's that, okay? Whenever at the beginning I said that there's another reason why we need to, we only get one chance to fill out the application, but also that the application, we need to make sure that we're asking for as much money as we can get. Because what we don't want is we don't want to have to reach into our own pockets in the midst of everything and pull money out, okay? Because you're going to be stuck holding the bag. I'm going to be stuck holding the bag, and it's not going to be forgiven because of this rule. You're not going to get tax credit for it. You're not going to get anything for it. It's going to be gone, and it's over, okay? You lost it, okay? So that's why. Good. Okay, so then, now let's talk about some of the things that get tricky with layoffs and with things. Okay, so say now for a moment, let's look at if I lay someone off after I get the loan money. I lay them off. So I get the money, and I get that money based on saying, right, because that paperwork says how many full-time employees do you have, what's the rate of pay you're paying them, and that helps determine how much you qualify for the loan. I've made that representation, I get the money, and now I lay them off. Borderline fraud, but I could argue either way, actually. But regardless, here's the deal. So what happens is if we do that, there's a calculation that comes into play that will deduct from our potential amount that is going to be forgiven. It reduces the amount that's forgiven by the amount that we saved by laying that person off and not having to pay them like we said we were going to do, right? People who get these loans get them because we're saying we don't have money because we're paying our employees. We're paying our employees. Money is coming out of my pocket going to an employee. I'm not laying them off, so give me a loan to help put money back in my pocket so my business doesn't go under. Now you've gotten the loan, you have the cash, and you say, you're laid off. Thanks for the extra money. This says the amount that you're going to get forgiven is reduced proportionately. There's a formula. You need to talk to an accountant, a lender, and have them help you figure that out. Or second, just don't lay anybody off. You should ask for more money. Okay? Just ask for more money. So that's that. However, now here's a fun twist. Okay? This is where it gets interesting, right? Again, I'm only giving you guys the high points on these summaries. You need to call me. You could call another lawyer who's studied in this. I'd encourage you, please do it. If you're an employer working through this stuff is complicated. I'm giving you the high points to get you going in the right direction to let you know it's going to be okay, because I'm doing okay. You're going to do okay, but reach out to somebody, please, when it comes to interpreting this stuff relative to your specific facts, okay? Because everybody's different. Every single thing is different with everybody's place that they work, and every business that I deal with is different. Okay, so here's the deal. Whenever we're talking about a situation, potentially, I'll give you a situation. So say I know in the back of my head now as an employer, because Eric just told everybody the rule, right? I just got told the rule that I'm not allowed to lay anybody off because it's going to reduce the amount of forgiveness that I have, okay, that I'm allowed to use. But what if, let's just say for a second, let's say that I pulled together retirement. I'll talk about that in another video. I pulled together some other cash. I pulled together an emergency fund. I pulled together my tax return, the credits that I have. I have a pile of money plus the loan, and I go, I'm really struggling to make this work. I didn't ask for enough in my loan, and I'm having a hard time. What remedies how am I going to do this? What am I going to do? Can I lower the wages? I'm not laying them off. I'm not going to lay my employees off. But can I lower the wages so that I can afford it? It's just temporary. It's just temporary. I'm not going to do this long term. I'm not going to do it. I need cash flow. Really, that's what this is about. If you get into a position where you absolutely need cash flow, as an employer, are you going to be penalized on your forgiveness at all for lowering wages of the employees that you have dedicated yourself to not lay off? The answer is, it's a typical lawyer answer, I'll be honest, it depends. But here's the good part. Primarily the answer is yes. What you can do is as long as, and again, formula, you need to talk to an accountant, bookkeeper, need to talk to your lender, need to talk to a lawyer. You need to get a team of people and look at this and go, how much can I lower these wages? I need X amount to get through. Here's everyone's wages. Does it qualify or does it exceed, the number is, does it exceed 25% of what that person made, and there's the formula, made in the last quarter that was good and what you'd expect, and you need to talk to a professional. That's where I'm not, but I'm just telling you, you cannot exceed 25%. So you can lower wages up to 25% and still get all of your forgiveness taken care of and not worry about being penalized. Okay? The next thing is, what if I laid someone off? What if, I mean, everything that was going on with Congress, it looked like pie in the sky that this was even going to happen, that the CARES Act was even going to be approved. I had, right, these restaurants, I had to lay off my employees. I laid off my employees in between February 15th and April 26th. Can I rehire them once I get my loan money? I know I'm getting my loan money now. I wouldn't have laid them off if I had known that this was really going to happen. Okay? If my overhead wasn't as big as wasn't as large as what it actually was. If I wasn't drowning in bills without any income coming in, I wouldn't have, right? So can I rehire these people? And the answer is yes. You can rehire them, and you won't be penalized. You won't be penalized in the forgiveness calculation, right? So again, though, going to have to be proof that you rehired them, the date you rehired them, the amount you're paying them, all that stuff, right? In comparison to what they were getting before you laid them off. between February 15th and April 26th, right? So, but that's fantastic news because, right, if I get the money and I lay them off, the amount that I'm going to be forgiven changes, goes down, okay? That doesn't apply if I went ahead and I let them go before I knew that this was all actually going to work, and I go, can I bring it back? Can I bring it back? I need the help. I think we can do this now. I think I can do it with the money and the loan, and I think we can do it, right? Yes, you can do it, and the forgiveness is not going to bring it down. Okay, so then we talk about, right, so as a business owner, the next question is, what do I have to submit in order to get this forgiveness? We're going to have to submit applications for forgiveness. This is where we're going to have all the itemized stuff. In the last video, I specifically said, open up a separate checking account in a lending institution of your choice that's specifically earmarked for this government money and specifically earmarked. You have to go back a little bit, right? We have to go back a little bit because, right, I'm paying now, right, in March, I have to go the whole way back to February 15th. Anything I paid for from February 15th to now, or until I get my money and I get the money and I get the account set up, that all has to be calculated and tracked and everything, right? Because it's all going to have to be logged for whenever I do this calculation, because when I fill out the application for forgiveness, we're going to fill this out, and we're going to have to verify the itemized list, which includes how many full-time employees we've had and what the pay rates were, okay? The lender then is going to take the application, and the lender has 60 days to make a determination on whether the application is approved. Now, ultimately, approved, not approved, this and that, what it's really going to be approving is the amount. If you cut through it, how much of your loan is forgiven? That's going to be what's determined. Okay, it's going to go through all the items. It's going to go through the amounts. Is it qualified? Was it part of the loan? Blah, blah, blah. Was it spent from the money that came from the loan? Yes. It's not, again, it's an amount equal to the itemized amount of the loan. Yes. It's not in excess of the total amount loaned. No. Okay, so it's going to go through all of that. Okay, there's going to be a determination that comes down that tells you how much is forgiven. So that begs the question then, and this is what I mentioned last video to put a thumbtack in, is when you're spending this money, right? If I get a big loan and I go buy a Ferrari, guess what? The lender is going to look at that and go, unless I'm in the business of buying and selling Ferraris, and I would have bought the Ferrari regardless of whether the coronavirus had come or not come, and I did it for my business, and it was imperative in the functioning and survival of my business to buy the Ferrari, then maybe. But for most businesses, that's crap, and you're not going to be able to do it. And what's going to happen is the amount of the loan that you spent on the Ferrari is still going to be a loan. It's not going to be a grant. It's not free money, and you just lost it. It's going to be stuck with you now, and you have to pay it off. And from what I understand, again, the law is changing here and there. It might be extensions, might be. But from what I know, the maturity date, you have 2 years. We have 2 years to pay this off, okay? I don't know about you, but with everything else I have to worry about, paying off a Ferrari in 2 years is probably at the bottom of the totem pole, at least momentarily, right? At least momentarily. Right now, there's a lot of other stuff going on, okay? But just so you know, and I use that example to be outrageous so that you remember it, right? So that we remember what we're talking about later, and you go, Eric mentioned the Ferrari, and you can't go and just buy that because it's not going to qualify, right? So is this similar to a Ferrari? Is it similar to what I customarily would have purchased in order for my business to survive if the coronavirus, whether it was here or not, especially now that it's here, do I need this to have my business survive? Okay? So that's that. Making sure, again, so I mentioned the 2 years. I mentioned that we're keeping everything separate. We're keeping it neat. If you can't do it, hire someone to do it. Ask someone to do it. You and I all know, we all know people who have that gift, right? We all do. They probably annoy you, like some of them annoy me, right? And so, but this is an instance where they can dazzle you with their skill, and you will be, when this is over, and you end up having everything in an Excel spreadsheet across the board. This is what I spent from February 15th to June 30th with my loan money, and it's to the T with evidentiary, with your evidence backing it all up, and it's all tied to it with a bow, and you turn it in and your banker loves you because it's not in a shoebox full of receipts, right? You're gonna want to kiss them, right? It's gonna be a fantastic thing. So I'd encourage you, find someone to help you with that. If you're not naturally gifted at it, find somebody to help you with it. Okay, again, only hitting the high points in these. Call us. Call another lawyer who's studied this like we have. Do something, right? Don't try to track through this by yourself. The bankers right now are underwater. They're doing a fantastic job, though. Mine in particular that I'm dealing with, putting in late hours like I do, and they're just doing a fantastic, amazing, just wonderful job for us. Accountant doing the same thing for us. Okay, so next video. What's coming up the next video? We're going to stick with, there's probably 5 or 6 other topics that I want to talk about, but the next one that's coming up, I think, is a good one. It specifically, again, it relates to employers, and it relates to how we can, a little bit more money to keep in our pockets so that we don't have to max out this loan and go crazy and overextend ourselves, but it's another factor to take into consideration. And specifically what it relates to is payroll tax and payroll tax credits, and being able to temporarily defer payment of those payroll costs. Okay, we're talking about FICA, we're talking about all the stuff that goes along with payroll. You get to not do some of it, and then you get to defer other parts, and it's going to help keep a little bit of cash for this period of time in your pocket, so you're more liquid in order to pay for the employees that we're not laying off. Okay, so that's that. Again, www.clfdlaw.com. I appreciate everyone checking out this video. You can always leave us a message. You can always, our phone numbers, emails, everything are on there. We're checking our messages constantly. Whole office is mobile, so you can get a hold of us anytime you want. For this video, I would ask that you please like it, please share it, get this information into everybody's hand. Keep your eye open for the next video because it's going to be coming very soon. And last, I just want to say hang in there. Hang in there. Stay with me. We're going to get through it, and we're all in this together, and so we might as well learn from each other while we're going through this. So thank you guys again. I'll talk to you again soon. Have a good night.